Good morning, everybody. Hope you're all okay on this very wet May day. Bank holiday weekend as well, so it's bound to be raining, isn't it? You can guarantee it. Right then, let's start. So, the strategic theme at the IAB for May is technology. Technology and its advances has had a massive impact on the finance and particularly the accounting sector. In the 60s, ATMs were introduced to enable bank transactions without the need for bank cashiers. However, further tech advances meant that in the 90s, we started banking from home. And now we can do our banking on our mobile phones from anywhere in the world. Artificial intelligence can help accounting and finance professionals be more productive. All algorithms allow machines to take over time-consuming, repetitive and redundant tasks, and that, as I'm sure we're all aware. Rather than just crunch numbers with the support of AI, finance professionals will be able to spend more time delivering actionable insight. Machines can help reduce costs and errors by streamlining operations. The more finance professionals rely on AI to do what it does best, analyse and process a tremendous amount of data and take care of monotonous tasks, the more time we humans will recover to do what they do best. New technologies change the expectations clients have when working with companies, and it's the same for accountancy. AI helps accountants be more efficient. As you can see, integrating technology into your company can help you differentiate yourself from the competition, streamline all your operations, improve customer satisfaction, and keep up with the advancements in this sector. However, just a little note at the end, encryption is key to protect all this data from hackers. Now, I'm going to go to the speakers now, but firstly, to ensure we keep to time, I'll be giving each speaker a 15-minute time check to let them know they have 5 more minutes. So, our first speaker this morning, in line with the IAB strategic theme of technology this month, we're thrilled to announce that Starling Bank, Ollie Krishnan, will be joining us for a session titled Helping Your Clients with Business Banking. During this informative session, Starling Bank will offer a comprehensive overview of how partnering with them can benefit both you and your business. They'll highlight their innovative features and cutting-edge technology that distinguish them in the industry. Additionally, they'll discuss the integration of apps and technology and how to tailor your technology stack to meet the unique requirements of your clients and industry. So, good morning, Ollie.
Good morning, Carolyn. Thanks for having me.
I'd lost you then for a minute. Are you all right?
Yeah, very well, thank you. Very well. Yeah, thanks for having me this morning, and
Good.
Thanks to Sam and Sujay as well for the invitation.
No problem. Do you wish to share your screen?
I will, yes. It's currently disabled, but as soon as I'm given permission, I will share my screen. It looks like it's just allowed me to.
Yes.
Everyone see my screen now?
Yes, excellent.
Do my best to move a few things away from the bottom of the screen as well. So let me just minimize this for a moment. So yeah, nice to meet everyone. Thanks for taking the time on a Wednesday morning to listen to all things business banking at Starling, and I'll do my best to obviously keep in time and only talk about business banking and how we can support you for about 10 or 15 minutes and leave some time for any questions at the end. So I'm Ollie. I head up our accountancy partnerships channel here at Starling Bank. I've been with the bank for 5 years now, so quite a little bit of time on the digital banking side. And what I do in the UK is I support accountants and bookkeepers up and down the country of all different shapes and sizes, from sole practitioners to top 20 firms in the UK, support ultimately their SME clients with generally some of the challenges that you'll be faced with when it comes to opening business banks to support your clients. So I'll start with a general overview about Starling, but also what the challenges are within the landscape of SME banking right now. As a very, very brief overview about Starling, we are a leading fast-growing digital bank. We were founded back in 2014 by our founder, Anne Bowden, and we got our banking license back in 2016 and started offering personal accounts in 2017. That grew very, very quickly to a point now today that we support over 4.1 million customers in the UK. And since launching business banking for SMEs in 2018, we now support just over 600,000 small business customers. And that varies from self-employed, sole traders, startups to established small businesses. And it equates to around a 9.5% market share. So a lot of growth in a very short period of time. And ultimately, why the bank was built was because we wanted to use technology, to really enable customers to have a better experience streamline their service, but also ensure that their overall service was higher than what was currently available to them in the market. And that's what's allowed us to grow very, very quickly. We also felt that SME banking as a whole was really heavily underserved by the traditional incumbent banks. And that's where we've really sort of come into this space and been able to grow very quickly to support small businesses. So I'll go on to what I feel and what we regularly hear as feedback from accountants and bookkeepers as some of the big barriers to entry or challenges within SME banking to support your clients. So one thing right now, which is always talked about in the press, is something that comes up more and more. And I normally see a couple of notifications in the news every couple of weeks, but it's branch closures. So more and more banks and building societies have closed over the last nearly 10 years now. There's over 5,800 branches that have closed since January 2015. And that's around 50 plus each month that we're seeing closed. And as a result, those traditional high street banks and building societies are digitalizing. And what that's impacting is the service levels to support your clients in the local community. In the pandemic, we saw this actually sort of fast forward quite heavily by a few years, because when those bank branches were closed, there was significant delays in accounts being opened due to their traditional sort of onboarding journey as such, so appointment availability, telephone calls, and not having a slick online application process. So we often hear from accountants and bookkeepers that the speed of setup can take anywhere from 2 weeks to 8 weeks, sometimes longer. When you've already got an incorporation certificate to share with your client, there's normally a significant delay and disparity in terms of your service that you're offering to them, mirroring that with your client in them getting an account set up very quickly. Relationship managers are moving on as well. So there's lack of relationships now. There's no points of contact or traditional relationship managers as there once were in many of the locations that we're seeing branch closures. And that's then having a knock-on impact to leading to poor service levels and worse outcomes. So we're seeing a lot more customers now look at digital banks as an alternative. And you'll probably see in the right-hand side of the screen, or potentially your left, the overall service quality results you'll find with ourselves, Monzo, Tide, and other newcomers who are really sort of challenging the banking landscape, are actually overtaking a lot of the traditional high street banks at this moment in time. What we're also seeing is that there's a rise in costs as well. So more and more customers are looking at the costs that they're currently having to pay for business banking. And the beauty of Starling is that there isn't any monthly fees or itemized transactional charges for UK payment charges. So they're looking for the fair value and what's available out there. On top of that, a lot of the traditional high street banks, whilst it's improving, they generally are having a worse digital user experience. The integrations are more clunky. The actual steps and processes to actually get connected to the likes of Xero, QuickBooks, or Free Agent, or actually use some of the features and functionality with some of the high street banks, aren't as advanced as the likes of Starling and other digital banks. And then there's this constant reputational risk factor as well. So a lot of partners we speak to want their clients to have better outcomes, better experiences, and as a knock-on effect, it reflects their service level to supporting their clients. And again, this sort of leads into lost trust and people moving away or switching from their own bank or practice. And we've seen a lot of that based on accountants and practice partners' own experiences with their accounts or their client accounts having issues. And that's resulted in looking for more options when it comes to supporting your clients with business banking. So hopefully that gives you a little bit of an overview of some of the challenges that we find accountants and bookkeepers are seeing in the UK. And ultimately, they want a digital banking experience to align to their other software integrations and technology stack that they've already built. So hopefully that gives you a little bit of a bite-sized overview. Just in terms of Starling, in terms of business banking, which is an area that I'm specifically in, I'll highlight a couple of our core features of why we've become so popular in the UK, why we're growing by around 500 to 1,000 new customers a day. And like I said, sort of reached over 600,000 customers since 2018. So the one big thing with Starling is fair value. You can open a free business account essentially without no monthly fees or any UK payment charges. So again, we're normally very, very cost effective in saving your end client potentially hundreds of pounds in business banking fees. We offer 24/7 customer support. So although we are a digital bank, the big difference with Starling to a high street bank is you won't actually see us directly on the high street. It's all within your smartphone, whether that's on an iPhone or Android, but you can speak to our UK-based team in the app 24/7. We're a 365 bank. So if you have a problem at 4 o'clock in the morning, not that I'll be up doing my banking at that time, you can speak to a member of our team and we'll help sort that out for you. We have things like real-time instant payment notifications. We were one of the first in the industry to launch that. So if I was to send an invoice to, Sam, for example, today, you'd get a real-time payment notification to reflect on that. And that helps our end customers as a small business reflect on your real-time cash flow, your balance, and auto-categorizing that into your spend. We're fully integrated with the likes of Xero, QuickBooks, and Free Agent. We have industry-leading bank feeds so that you can get real-time transactional data pools. And we also have a feature called Spaces, which I'll touch on a little bit more as we go through the talk today. But it's an area that you can separate your business day-to-day transactional banking to an area like corporation tax, quarterly VAT returns, or a business goal that you may be working towards, like a new website or a new piece of equipment, for example, and we'll cover that shortly. We're also part of the current account switching scheme. So we do see a lot of customers switching over to Starling if they're not happy with their own banking experience. And you can do that very, very quickly with Starling. We're also available to deposit cash at the post office. So we have a partnership with the post office for real-time cash deposits, and there's 11,500 branches in the UK to do that. And last but not least, we are a fully regulated bank. So it's in the name, we are a fully licensed bank. Often with digital banks, there's always this question mark of, are you an EMI or an electronic money issuer, like a prepaid card current account provider, or are you a fully licensed bank? We are a fully regulated UK bank. So all of your funds or client funds would be protected up to the 85,000 limit and threshold. As you'll see at the bottom as well, we're trusted by many people in the UK based on their own experiences, but we have won a number of awards and accolades along the way. We just actually voted in this year's Smart Money People British Bank Awards for the best banking app provider. Last year, we won the best banking provider for business, and we're only one of two which accredited providers as well. And one of the things we actually talk about with a lot of the community partners we work with is sustainability credibility as well. And we are an ethical bank. So we do see a lot of customers and businesses that are either B Corp focused or heavily focused in doing the right thing when it comes to picking their bank, looking on places like bank.green to actually make an assessment on how your bank actually sustainably focuses on running their business. Our accounts and sweet spots, we're generally best suited to the S of SME banking. So we often get asked who we can support. Generally speaking, limited companies, LLPs, as well as general sole traders and startups. We at the moment can't actually onboard general traditional partnership structures or some charities if they're not registered as a limited company on Companies House. We can only onboard individuals who are UK residents, and the customer needs to meet our standards of AML and KYC, fraud and credit checks. We do have a couple of specific requirements around industry sectors that we can and can't onboard, and I'm happy to talk through that with you on another separate call. But generally speaking, things like defense and weapons, gambling and betting, cryptocurrencies, things like adult entertainment, antiques, these will be some of our SIC codes that we don't onboard in terms of our risk appetite, but we're always happy to cover that with you ahead of a partnership discussion. This is a very, very quick slide just about our marketplace where you can connect to the likes of Xero, QuickBooks and Free Agent directly from within the app. Again, we have very strong user feedback so that you can connect to those third-party services. And outside of accountancy software, we also have relationships with other third-party providers like insurance, wealth apps, and other connections to things like Slack and payments for Zettle and SumUp as well. So you can pay and connect through the app with those services. Just going back to Spaces, what I mentioned earlier, this is our Spaces feature within the app where it's a bottom right-hand side of the screen there, and it allows our customers to put a goal, set an image aside, set a target balance, and you can actually round up your spending to those areas. And like I said, for a lot of our business customers, that's being used at the moment for their corporation tax and quarterly VAT returns. Again, we do see some customers using it for things like team lunches or Christmas parties as they're planning, potentially even now ahead of Christmas, but can't believe I've just mentioned Christmas at this point of the year. In terms of Spaces in general, what we also find as well is from a client educational point of view, we do work with quite a lot of partners that follow things like profit first or helping their clients make decisions like keeping money aside from their day-to-day transactional spend. And again, this is a big part, especially within micro businesses and startups and sole traders. We really find that this is a helpful way to handhold your clients to support them in moving money aside from their day-to-day business transactions. What we do at Starling is we work with about 750 partners in the UK at the moment, as I mentioned, all different shapes and sizes, from bookkeepers to larger accountancy firms regionally across the UK. And we offer 5 core benefits. So we'd love to speak to anyone Following the call, we can arrange a discussion, but we offer 5 core benefits. One is that you would have your own dedicated point of contact, so that anyone in your team as a partnership point of contact, we can support you and understand your client needs when it comes to banking with us. That's something that a lot of our partners really value. We set every official partner up with your own application, partner link and QR code for the practice. So it makes it a little bit more of a tailored experience when referring clients to Starling. You also get your own marketing packs, introductory guides, images, links to videos, and information that you can at your own discretion share on your website or with your clients. We love to collaborate, sort of hence being on this session today, but we also get involved in larger accountancy events. So we were at Accountex last week and the Digital Accountancy Show in April, but we also do go out and see our partners in practice or run webinar series and YouTube videos as well. So we're always happy to get involved with educational content. And then the team training element is just making sure when we are meeting you in person or over Zoom, we can make sure you have a really strong overview of what our products and services are, what our sweet spots are and risk appetite. And generally, we just feel that that helps in terms of client success and avoiding any real sort of negative outcomes and experiences or declines that could be easily avoided. This is the wider overview of all things Starling. So as I mentioned, just to sort of summarize, we do offer business accounts, which is the area that I mainly focus in for SME clients. Our sweet spot really is up to the audit threshold at this moment in time in terms of features and functionalities, but we also have, like I said, personal accounts, which is our original account offering where the majority of our customers are. Also joint account spending, accounts for teenagers. We have a very popular account for children now, which is available from 6 to 15 years of age. So a lot of parents and carers are starting to use the Starling Kite account to help their children understand the value of money earlier. And then we have a few other departments within Starling, which is our marketplace team and our banking as a service platform for other financial institutions working with Starling to support their clients' framework in the UK. I think the one final touch point I will cover, just conscious of the time, is we have seen a really big uptake in sole trader applications recently. I know Making Tax Digital and income tax self-assessment was pushed back a couple of years ago, and that delayed some people moving across their sole trader accounts. But we have seen from a lot of our partners a really big push recently to separate your personal and business earnings. It's a reconciliation nightmare for anyone on the call. So we've been seeing that as a really big growth area for us in preparation for MTD and obviously the beta testing that started.
That's your 5 minutes warning as well, Ollie. Not warning. Okay. Yeah.
Brilliant.
What?
Thanks very much.
Whatever, 5 minutes.
Yeah, in terms of app stacks, I'll move on to the Q&A towards the end, but I think one of the general recurring themes we've seen from accountants and bookkeepers across the UK is actually consolidating the number of apps and technologies that they use and maximizing the ultimate utilization across those services to support your clients. I think the sweet spot personally is between 5 and 10 core apps. That being said, we obviously have partners that have very industry specific client requirements, and obviously the new AI requirements coming in as well, and being able to take advantage of that to streamline the efficiency for your practice. But one thing I would always recommend is that there is a partner I work with, which is called the App Advisory Plus team. They've built a great app advisory tool where you can use it for free, look on their directory and see essentially every part of the Xero, QuickBooks or Free Agent ecosystem, and you can plug in and play and get feedback and reviews based on how they've used their app stack before, and how you could potentially then build your own as well. And I think the most important thing, if you are attending the larger events and shows, is trying to adopt 1 or 2 pieces of technology and do that well, opposed to being overwhelmed and trying to take on 10 or 15 pieces of new technology, paying quite a lot for those subscriptions and services and then underutilizing them. So it's all about freeing up your time and getting the most out of those softwares. So hopefully that helps. Conscious of the time, so I'll leave the last few minutes on my side for if there's any questions, if we want to do that now or at the end. Caroline, that was pretty much me. Happy to leave. Yeah.
I'm going to direct you to the chat and ask you just to have a read through it, because I think there's some stuff in it that you probably want to do away from a Q&A session.
Yeah, happy to do that, Caroline. Yeah, I can pick up some of these.
If that's all right. But then one of the questions which one of the IAB team has put a link on to answer is, what does the £7 business toolkit include? Okay, yeah. So the toolkit essentially is a piece of technology that we built back in 2020. It's not there to directly compete with the main software ledger systems like Xero, QuickBooks or Free Agent. It isn't anywhere near
as complex, but it's essentially a bookkeeping / invoice to-do list. And what we found is that a lot of micro businesses and startups, before they're potentially working with a bookkeeper or an accountant as a gateway product, will usually try and attempt to get some of their invoices and their bookkeeping in order. It's a £7 a month product, which essentially allows customers to get an ongoing running tax estimate. They can file their own tax return directly through HMRC with Starling. But what I would say, and again, I'm obviously a huge advocate for accountants and bookkeepers, is a lot of your clients and customer base will already be using one of the ledger systems that you've suggested that they use. But what we find that there is sometimes this early period of a new business that's starting up that's probably very much below the VAT threshold, or certainly below £120,000 turnover, that has tried to do a little bit of it themselves in terms of DIY, invoice chasing, and having an ongoing to-do list. But generally, it's a gateway to then using the main ledger systems that are out there. But it was something we built in the pandemic, and it was actually part of our commitments when we received some grant funding from the SIF requirements in 2019.
Excellent. Another one from Trevor: is Spaces interest bearing?
Unfortunately, not at the moment, Trevor. No. So we did have a 1-year fixed product within Spaces that was interest bearing, but based on the feedback and something that I thought would be the case, is that we wanted to offer a really more competitive, easy access account opposed to a 1-year product, and not tie up your cash for more than a year to then use it towards your corporation tax and VAT returns. So we actually have pulled the interest bearing fixed product with the view of potentially launching a new easy access product that's available. So there isn't anything just yet, but it is going to be very much in our plans. So watch this space. And on the personal side, we do have a 5.25% 1-year fixed product, and then an easy access ongoing 3.25% for personal accounts and joint accounts.
And Sujay's just he's made a note of some of the questions and can take them offline with you, Ollie.
Yeah,
some comments and that in there as well.
Yeah, I've put my email address at the top there. So if anyone wants to email me or our dedicated accountancy partnerships inbox directly, there's my number, and also I'm on LinkedIn. So feel free to connect with me if you'd like to find out more about the partnership program and all things in the middle. So any questions, we're happy to take that offline and support you with that.
Thank you, Ollie. That's just that was really, really interesting, and I do really like what Starling stands for. The ethics are very much aligned with our own, so I do hope people do take up the partnership agreement with you.
That'd be great. Yeah, thanks for having me as well. So I'll still be listening in. So if anyone's got any questions or want to email me, I can catch up offline.
Yeah, or you can answer the questions in the chat, Ollie, if you feel that's appropriate. So, but thank you very much. Yeah,
Thanks.
Nice.
Thank you.
Back.
I'm going to move on, but just before I do move on, can I just say we've got 205 participants, which is the most I think I've ever had on one of my coffee mornings. Hello, everybody.
Feeling the love from Accountex, Caroline.
Yeah, that's it. That's what it is.
Okay.
Right. So moving on to our second speaker, Thomas Harris from Bagby's Trainer. Is that pronounced right, Thomas? Probably not.
It's Begbie's Trainer.
Yeah, my Yorkshire accent does not do certain words. Shocking.
I quite like Bagpipes Trainer though. We get a reward system for introducing new names like this. So
yeah. I have to be signed up for that then immediately. Oh, right. Now that we know how to pronounce it, is a distinguished name in the field of insolvency. It stands out for its decades-long commitment to excellence, with a track record of successfully navigating businesses through challenging financial circumstances. They bring a wealth of knowledge and experience to the table. Bagby's Trainer offers invaluable expertise in business recovery, financial advisory, and property service consultancy. Good morning, Thomas.
Good morning. Hi, everybody. I'd like to share my screen if that's okay.
Yeah,
everybody.
I think it should be fine to share.
Yeah, sure. Okay. Okay. So hopefully
yeah, I can see it now.
Great, fantastic. So yeah, thank you for the introduction, and thanks to Ollie as well for his talk about services that they offer. As an insolvency practitioner, we love it when we see Starling as a bank on the other side, because they actually interact with us interact with their customers as far as we're aware. So thank you for that, Ollie. So a little bit about what I'll talk to you about today. We are insolvency practitioners. That's how the business started as a core back 40 years ago. But we now offer many different services, different service lines. But predominantly, I work on the insolvency side of the team here at Begbie's Trainer, and I'd like to talk to you today about insolvency and insolvency events and when they happen. I'll go through some trends with you, some examples of when we've had proactive engagement, and then occasions where directors unfortunately have left it to the last moment. I've also put some horror stories in here as well, which if we've got time, I'll go through those with you as well. So an insolvency event is something that is triggered when a company enters into either a liquidation, administration, a CVA, or it could even, on the personal side of things, for sole traders, it could be an IVA or bankruptcy. I'm going to talk about corporate entities today and the points of insolvency for companies that are struggling with their finances. That's defined by the Insolvency Act, and that could be that they're balance sheet insolvent, cash flow insolvent, unable to satisfy a statutory demand or a CCJ. A director of a company only needs to really consider their insolvency when one of those points are met. So there are 4 points to insolvency, but only one needs to be met to actually be considered insolvent. And really, it's at that point that the directors need to shift their mentality from the stakeholders to the company's creditors, those that are owed money by the company. There are various different types of insolvency events. So one is a CVA. So CVA is a rescue procedure. So if with the business there, they've got a good business and they can show that they can return to profit if they make a few changes here and there, they can demonstrate on a 12-month cash flow forecast that they can afford to pay contributions into a CVA. We can put forward a 5-year time to pay, almost like a 5-year time to pay arrangement, but that would cover all of their creditors. That would cover their HMRC debt for VAT and PAYE, which is now a preferential debt, and then also an element of their unsecured debt as well. This deals with the immediate cash flow issues. Spreading those payments over 60 months can really give that company some time to breathe. With time to pay arrangements with HMRC at the moment, what we're seeing is revenue becoming really strict and only really putting through 1-year time to pay arrangements. We are seeing some 2-year time to pay arrangements go through, but they are heavily supported by an insolvency practitioner in the background. Beyond that, the only other rescue option that's left then is a CVA, where they'll get the 5 years to pay. The company's directors, they carry on trading that business as if we were not there.
Can I just interrupt, Thomas? Should your slides be moving? Because we're still just looking at the cover page.
Yes, they're moving on my screen.
They're not on mine.
Sorry. Let me just escape.
Tom, it's moving now. We're on introduction. Is that the right slide?
And there we go. Is it moving now?
It's on introduction, Tom.
Okay, I don't know what.
Tom, maybe stop sharing and reshare again.
Yeah.
Yes.
I'll put it on slide view as well, because it's on your source view.
Okay, let's see. Apologies, never had this issue before.
All right, don't worry about it. It was Suji and Sam that picked it up. I just sat here looking at it.
Bear with me. I might have a conflicting program open. Sorry.
No worries.
No, I'm on the.
Don't you love it when it all goes to plan, Thomas?
Yeah. I'm at the stage now where I'm going to confess I have no clue how to fix this.
Do you want to really quickly share it to me and I can share my screen if that helps?
Yeah, via email?
Email it to me, yeah, and I'll just present on my screen.
sure I can quickly do that.
Thank you.
I think I can do that. I'm questioning my capabilities.
Whatever you do, don't send it to me.
Yeah, or me neither.
Yeah, no.
It's Sujay P, isn't it?
Yeah, sujayp@iab.org.uk.
While you're sorting that out, I'd just like to say both Thomas and Ollie are going to be our sponsors at the awards as well next month.
20th of June.
Yeah, 20th June. Yeah, exactly. So very much looking forward to it, and thank you very much for your support with those awards as well.
There you go, Sujay. If you've got that, great.
Okay, give me 2 minutes. Just waiting for it to come in.
I believe
I'll
the
try.
finalists are finding out as well, aren't they, Sarah?
They are, yes. So we are releasing on social media at the moment. This week we have finalists being released. So oh, here we go, Sujay. Yeah.
No, that's still
So
Thomas.
follow that. So obviously finalists will be invited to the House of Commons for the awards day.
Is it moving now?
Sujay, you're going to share your screen?
I'm trying. His presentation isn't opening.
It's back on screen now, but it doesn't seem to be moving.
Have
does
we
it?
anything else to say about the awards while we start?
Or is it-
And then we can
If
give
we
Thomas
just
a-
carry on from what Sarah was saying, so yeah, we on Friday we started announcing the finalists. So we've had innovation, education, impact through finance, and today at 1 p.m. Accountant of the Year will be announced. So keep an eye out because there's a new finalist being announced every day, which is great. And as Sarah says, finalists will be invited to the ceremony with the winner being announced on the day. And both Ollie and Thomas will be there, which is great. And yeah, the only other thing I was going to say from an accountant's point of view, that it's great to see many of you attend and be on the stand. So thank you for that. And hopefully many of you were able to catch Sarah's presentation, which was really well received. And the content from that presentation, we will be doing a lot more work on, and also sharing it on a much broader level. So watch this space.
Yeah.
Oh,
So we
where-
have
where
Thomas,
are
and I can talk about that more at the end if
Yeah.
you like. So
Yeah.
okay, that's our interlude. Thomas, back to you.
Yes,
Okay.
so much.
I'm going to add a couple of minutes onto your time, Thomas, just
Oh,
because of that.
very
Very
good.
diligent timekeeper, Caroline. Excellent.
I am.
Yeah, Super. If you could move to the next slide, I think it's 1 or 2 along. So yeah, I've spoken about that. CVA we've gone into. So if you go back 1 slide, Sujay, that'd be great. So an administration is potentially the next option after a CVA if we're not able to get a payment plan agreed with the creditors over a 5-year period. We tend to use the administration if the company's under some immediate pressure and there is a business there that can trade on, but without the historical debt. So what we may be looking at there is myself coming in as administrator into a limited company. I could look to trade the business for a set amount of time if we believe that we can act profitably in that short period whilst we try and find a suitable buyer for the business. If we don't have a suitable buyer for the business in that trading period, then we would then look to dissolve the company and realise the assets on a breakup basis. But with administration, we could always look at a pre-packaged sale, whether that's to a connected party, one of the former directors, or a team of employees that club together that decide to buy the business, or it could just be that a competitor comes in and buys the business out of administration. The proceeds of which would then be distributed to the company's creditors, those that are owed money by the business. More commonly, we've then got the liquidation, which is a voluntary process that's driven by the company's directors. So if we're in a position where we can't improve the business, nor can we agree a sale of the business, then the directors can look to put the company into a CVL via the shareholders. My duty at that point is to again maximise the asset values. So we can sell a business to the directors again in a liquidation, and again we can sell the assets on a breakup basis. My duty is to maximise the asset realisations again. In a liquidation as well, if there are employees that are left behind by the company with large redundancy costs, then the employees of that company, once I'm appointed as liquidator, they would then have access to the National Insurance Fund. The National Insurance Fund would then step in and they would pay the employment rights that are outstanding to those employees. So that would be redundancy, notice pay, wages and holiday. We've seen a few inquiries recently where the directors are ready to close down, but there's just not quite enough money there, and that they've got some historical staff, and some of those staff, if you get 2 or 3 employees that have over 20 years service, that redundancy bill can be quite an amount. I think you could be looking at around about £30,000 per employee if they've got a long service award. So that it's a useful tool there as well for directors that can't afford to pay redundancy and to dismiss their staff. Suja, if you could go through to the next slide for me, please, that'd be great. So a creditor's voluntary liquidation, it's a process that allows the directors to effectively walk away from the company. If the business is no longer viable, it's insolvent and can't pay its debts, then this may be one of the only options that's available for the directors. It's a tool that's there and should be used by the directors to give them protection and give them the tools to put the company into liquidation and not make the company's position any worse. At the point the company is deemed as insolvent, if the directors allow the business to trade on and the position worsens from the point of insolvency, any future debts that arise from that point on, that could actually lead to the responsibility of the directors. That could lead to a personal liability for the company's directors, which we want to avoid at all costs. We don't want their position to be worse. They've already lost their business and likely their income, let alone them being on the hook for some debts that they've incurred when really they ought to have ceased to trade. The process to put the company into liquidation is relatively straightforward. So the directors call the shareholders to the table, and the shareholders then resolve to place the company into liquidation. Again, my role is to maximise the asset realisations, but I do have a duty to the Insolvency Service to submit a report on the director's conduct. And that report on the director's conduct, if your director clients have acted unlawfully, that could lead to disqualification. And that could be from a 2-year disqualification to 15 years for the most for the worst offenders, and I'll come on to that when I talk about horror stories later on. Suja, if you could move to the next slide for me, please. The other form of a liquidation is a solvent liquidation, and that's a member's voluntary liquidation. It's something that it comes around as the tax year comes around, where directors are looking at their options to potentially retire or restructure the business. This is the most tax efficient way for shareholders to get their money out of the business. The sweet spot for these shareholders tends to be around about £25,000 in capital to be distributed. Putting the company into liquidation through an MVL using an insolvency practitioner means that once we receive those monies from the bank, we're then able to distribute those monies to the shareholders as a capital distribution, which means that the shareholders are then able to claim for business asset disposal relief, formerly known as the entrepreneur's relief. I'll leave that to the accountants to work out where the benefits are for their clients, but we are very competitive on our pricing to make sure that where we're on the lower end, if somebody's got the £25,000 to £30,000, then we need to make sure that our fee is competitive to make sure that it's actually worthwhile doing. So accountants will carry out a quick cost benefit analysis and hopefully present that to their clients, and it will hopefully result in a saving in tax for them, as opposed to keeping the company open for a number of years to take down their dividends. Again, process that's driven by the directors who call the shareholders to the table to actually make that decision to put the company into liquidation. Something in the marketplace that we pride ourselves on and offer is the quick turnaround on getting this money out to the shareholders. A lot of shareholders have these funds earmarked to buy property or to retire and give money to family members. We do offer a facility where prior to our appointment, we let the shareholders and the directors put the money into our designated client account, which we open in the name of the company. That means that upon our appointment, we're immediately in control of those funds, rather than having to wait for some of the banks to actually get round and send those monies to us. We've some banks where we wait for 12, 15 weeks before money comes into us. And in some instances, some banks will send the money to us within 2 days. Once we're in receipt of those funds from the bank, we then endeavour to have that money returned to the shareholders within 5 business days. So they're not hanging around and waiting for their cash to come back to them. It's theirs. We'd rather they invest it as they see fit rather than getting the interest that we get on our accounts. Sujay, if you could move to the next slide, please. So some stats there. So there were 20,000 liquidations in 2023. So that was a 9% increase from 2022. The worst hit sectors in 2023, as you've probably seen with your clients: construction, wholesale and retail of repair of motor vehicles. So I mean, personally, I've seen MOT testing stations that have struggled since COVID, when the government lifted restrictions on having your cars MOT'd. I'm still seeing the effects, the cash flow effects on those amounts, those insolvencies that are coming through. Cash flow difficulties still, and we're 4 years on from that, where they lost basically 6 months worth of income. And then accommodation and food services, they tend to be the worst hit sectors. In terms of the insolvency numbers, just after the pandemic, the numbers for insolvencies, they dropped to around about 15,000 when the government offered their support for bounce back loans and furlough. So you can see that those amounts that were received did help to keep the insolvency numbers down, but did they actually need those funds? Should they have already gone into liquidation at the time of those bounce back loans being received?
And that's your 15-minute time check, Thomas.
15 minutes up, is it?
Yeah. Go on number 5.
Okay, fine. CJ, next slide then, please. So the things for accountants to look out for. Next slide, please, CJ. So what accountants and bookkeepers really need to do to help their clients and stop personal liability is basically flag early conversations with insolvency practitioners where we're seeing HMRC arrears building up that aren't met. If we're getting into a position where the clients are speaking to you and saying that they're struggling to meet the wages and the wage payments that are due for that month or the end of that week, that's the time that they really need to seek early advice from an insolvency practitioner. We can also assist with any threats of action. So if your client's presented with a winding up petition, that's still not too late. We can still do something to try and help them with that. If there's a good business there to be saved, then we'll assist with that. If, as the bookkeeper and accountant, you're seeing a high turnover of staff, that's a warning sign that we really need to be looking at. Why is that happening? Is it because they're not being paid? Has the customer made you aware of any loss in contracts? So if they've lost the contract, we need to find out why, and also discuss with them the options to get around those next steps. Sujay, if you could move on for me, that would be great. So this is an example of a business that sought advice from us earlier than most limited companies do. It was a roofing company that had a 10 million turnover. Unfortunately, as is well known, contractors were looking to reduce payments on application at every opportunity. This put a severe dent in the company's cash flow, which then increased the pressure from the suppliers and from HMRC as payments weren't being made. The business had good potential. They slightly tweaked the way in which they were working and who they wanted to work for, and that changed their outlook, and the next 12 months looked positive. They instructed us to almost sit on the board. We didn't take on a formal appointment as insolvency practitioners, but we sat on the board silently, assisting with their negotiations with HM Revenue and Customs. We sat on the board for a period of 9 months until we got to the point where HMRC were up to date and the creditors were back within their terms, and the company was then trading profitably again. That avoided the need for an insolvency and the dismissal of around about 90 staff. as opposed to the next one. Sujay, if you could move on for me, that'd be great. So it was an IT company. They had a £1 million turnover business. Unfortunately, they'd committed to fixed price contracts, and as COVID hit, those contracts then became loss leading, and they also had a high staff turnover, which meant that there was no familiarity with the clients, and work wasn't getting completed on time or up to the satisfaction of the customers. That led to the company falling behind with HMRC payments. They entered into a time to pay arrangement, but unfortunately the time to pay arrangement wasn't scrutinised properly, and it actually wasn't a goer from day one, and HMRC then refused to actually give them any further support. The directors then put £50,000 of their own money in and managed to get some recovery lending of around about £100,000. And at the time that they approached us looking to do a CVA and a demonstration, but actually when we looked at the options, they'd left it too late. They weren't able to get those debt levels reduced, and their customers at this point had all lost faith in them. So they lost a huge chunk of their customer base as well. So unfortunately, that ended up going into a liquidation. Sujay, next one, please. How am I doing for time, Caroline?
Sorry, you've got about 2 minutes.
Okay, I'll skip this one, Sujay, if that's okay. So horror stories, we're still seeing a huge amount of directors that borrowed on a bounce back loan, the full £50,000, when the 2019 turnover was nowhere near the £200,000 mark that was required to allow them to actually borrow that amount. In those instances, the Insolvency Service, they are pushing to obtain compensation orders against directors for those amounts. The full amount of the bounce back loan becoming personally liable if they have wrongly claimed the incorrect amount. What we are seeing some joy with directors where they are reaching settlements with the liquidators prior to the Insolvency Service getting involved. If the joint liquidators are able to reach a settlement, then they don't look for double jeopardy. They will only look to actually take the money off of the directors once, rather than going for the compensation order the second time. With the bounce back loans, we're looking at disqualification if the money's been used incorrectly. So if directors have taken the bounce back loan and then potentially removed the whole amount for themselves, they're probably looking at a disqualification order as well. So that's a huge risk to the directors. And we go through all of this with them in the first inquiry as well, so that we can talk to them about the risks and the potential issues that they may be faced with in the future. I've put accountants' duty to provide information. It may be something with over 200 of you in the chat. You may well have received a request from an insolvency practitioner in the past to provide certain information. Horror stories in that accountants, they sometimes are not actually sure what can be provided. Is it the working papers, or is it the actual books and records of the limited company? My only advice would be to seek your own advice if you're not clear on that, because a failure to actually reply to the liquidator could potentially lead to a private examination in the courts, and this is something that I've had to do recently. The accountants, they refused to engage with us. We knew they had some information because they prepared the accounts. They refused to engage with us. We sought an order to have them examined at court. They failed to arrive at court. They didn't think they were under any obligation to provide any information to the insolvency practitioner. The only time this really got serious is then when the court granted an arrest warrant for the accountant. The accountant then attempted to go on holiday and was stopped at passport control, where they were then arrested, held until our solicitors managed to interview them. And then a week later, we then received all of the company's books and records. So it's important that if you do receive these requests from the insolvency practitioner, you comply. And if you're not sure where you stand, that you do take some advice. Sujay, next slide, please.
I'm afraid I'm going to have to stop you there, Thomas.
I'm done.
I'm really sorry about that. I have got a question for you, though.
Yeah, sure.
Oh, my chat's disappeared. Let me find my chat again.
Caroline, once you've done that, I just want a couple of minutes just to share an overview of the account text.
I just asked this question. So my client received a letter from Insolvency Services that he did not become entitled to holiday taken not paid under section 1841C. With information, we believe that you did not become entitled to it during the 12 months ending with the date the employer became insolvent. Holiday start was from the 1st of January to the 31st of December, and he only took 2 days holiday. Do you know why he wasn't entitled to holiday pay?
Is this the director of the company or just a regular employee?
She just says an employee.
Okay.
Should I ask her to email you it?
I'm happy to answer any questions like that. Yeah. If we have to take employment advice from lawyers all the time, it may be that's something that's the avenue that you may need to go down. But there are directives out there about holiday that's carried over. Sometimes employees, they're contractually entitled to carry over 25 days holiday, and European directives actually, when it comes to an insolvency event, they only allow 8 days to be carried over for a full-time worker, for example. So sometimes that's where there's a difference in what the employees can expect to receive. That doesn't mean that they're not owed that money. It just means that the redundancy payment service won't pay out as much as what they're actually entitled to.
All right, brilliant. Thank you. And thank you very much for a very informative
there's some love for you.
really sorry. Go on, Sarah.
Love for you in the chat there as well. I don't know if Thomas, you want to answer some of those questions, as I'll let you have a look at the chat. I just wanted to just spend a couple of minutes just for those that went to Accountex last week and just summarize the talk that I gave, just very, very briefly, because there will be more information be released later on. I'm going to attempt to share screen now as well. Can we all see that?
Yes, you can. Practice growth cycle.
Yes, so just very briefly, this was the focus of the talk. The talk was around growing your practice, and I based it on the profit and leverage model here. So obviously profit is profit. We want to understand that, but in this term, or in this context, leverage is your number of staff. So the name of the game really is to grow a successful practice or a successful business. A successful practice being you on your own, so basically a well-paid job, or a successful business where you've got a team and now you have an income being generated for you through your team. Now, obviously, there's pitfalls as you go through that, and that was the focus of the conversation. I spent a lot of time talking about the transitioning to business because this is the bit that's least understood. Now, in terms of just the marketplace, it's unfortunate. Well, for me, we only see about 10% of businesses or bookkeepers and accountants actually making it through to a successful business, which is a real shame because given the low barrier to entry with a startup in this sector, and also the rewards of, I mean, we can operate at around 25% net profit, which is an exceptionally high and successful business we're entering into. And plus, with the market size, there's about 5.6 million small businesses that all need support from us in some level. And plus, with new legislation coming in, there's more and more opportunities for us to support them. So what I would like to do is just spend some time explaining how that can be achieved, because I don't believe it's just a lack of knowledge, or people haven't been shown how to transition through that journey. There's a lot of information in the marketplace, about exit or about pricing, but not giving the overview of the steps you need to take. So later on in the year, I'll be focusing or developing a course that people can actually deep dive into some of this and actually get some further information and hopefully grow their businesses, which I would love to see. But that just gives you a taste of what I spoke about last week. But that was it, really. So, and thank you for those that did attend. I very much enjoyed the talk, and it seemed to be well attended, wasn't it, at the time?
I think it was full, wasn't it, this theatre? It was certainly a very good talk. I certainly enjoyed it. Took a lot away from it.
Good, thank you.
Yes. And I went back to the stand and scanned the thing, so I now have a PDF of your slides.
Good. So,
watch this space.
Yeah,
I've been stuck in a best practice, in a good practice. I need to move. I need to transition.
Yeah.
But we'll see. We'll see what happens this year.
So
Right.
thank you to everyone who attended last week. I was at Cantex on the Wednesday, so I wasn't there Thursday, but obviously everyone understands that they had a great time and it was really well attended. And thank you to all our ambassadors who were supporting us in the stand as well.
Valerie's asked, was there a recording of the talk? And I believe David and Tom recorded it. Do we know what's happening with that recording, Sarah? Is that for personal use or is that going
The sound quality was really poor, so I don't know. Actually, Sam, it's with you. I don't know what we're
Yeah,
doing.
we're trying to if you register for the talk via Accountex, then Accountex will send you the recording. However, what we're trying to do is get it from Accountex. So I'm just in conversations with them at the minute to get it. But yeah, the recording that we did, because the acoustics in the exhibition hall were really, really bad. So the sound quality that on our recording is very good. So
Dwayne's made a suggestion that you redo it, Sarah, on a coffee morning.
Yeah, no, I'll be talking about it again. So
I'll limit you to 15 minutes.
I'll talk about it all day.
On a more serious note, Carol says our ambassador has stepped down. How do we get to know about a new group? Is that Sam or Sujay?
That'll be me. So, Carol, do you mind just unmuting yourself and just letting us know which group it was? But I know some have stepped down, so I am rejiggling people. So, do leave it with me. I will move you into another group, like ASAP. Yeah, perfect. Thank you. Drop me an email.
Right. Anybody, anything else? Or are we happy at that?
No, just thank you again to our speakers. They were really interesting talks this morning. Thank you.
Yeah.
And I look forward to seeing you at the awards next month.
And I'm sorry I had to cut you short, Thomas, but needs must, I'm afraid. Sorry about that. Right, and on that, our next coffee morning is after the awards. So the awards is the 20th of June. So good luck, everybody who's been shortlisted, nominated, whatever. Everybody enjoy your day, and I'll see you again on the 26th for the next coffee morning. Thank you very much, everybody.
Bye, guys.
Bye.
Take care. Bye.
Bye.